I'm joined by Angela Knight of the British Bankers Association. Hi, Angela.
Hello.
We'll start with mortgages and the credit crunch, seeing as that's been dominating the headlines and anxieties of people for some time now. Obviously, you don't have a crystal ball, but in your view, where do we go from here? Sort of, is the end in sight? Is there light at the end of the tunnel?
Well, we don't know what's going to happen with the credit crunch generally because it's a global problem. But as far as the UK is concerned and the banks providing mortgages, yes, there will still be mortgages there. There'll still be mortgages for individuals and they'll still be there at a whole variety of rates and terms.
But perhaps not so many as there have been in the past, and we're not such competitive rates.
Well, rates are dependent upon two things. One is the actual base rate, the bank rate, you know, when the Bank of England says, we're going to do this with rates. And the second is what's happening in the wholesale market, LIBOR, London Interbank Offer Rate it stands for. And LIBOR seems to be something that's on the front pages of all the newspapers at the moment, because that is the actual price of money. If you like, Bank of England says, you know, this is where our base rate is, but like everything, the actual price of money is what it is that it's going to cost somebody. So it's really looking at that interbank lending rate is going to say what are going to happen with mortgage rates. And that's not just a function here in the UK. That, of course, happens generally in all other countries as well.
So how's LIBOR looking at the moment? Is it up, down, sort of?
Well, LIBOR is, at the moment, the 3-month rate, the important rate, does stand quite a bit above base rate. And some of the actions we've seen of the Bank of England in their central banking function, which is known as providing liquidity to the market. Yes. That's the important thing in looking to see what happens at 3-month rate. And as it comes down, that will be one of the main determining factors on what it is that individuals pay for their mortgages. But having gone through all the technicalities, the bottom line is there's a lot of good deals available, and that's important for owning your own home.
One of the issues that has obviously been experienced by people recently is mortgage rates going up, products being pulled, like 100% mortgages, etc. And one of the reasons often cited by the banks and building society is prudence and this need to take a prudent approach. Were banks not being prudent before when it came to lending money to homeowners?
Well, different circumstances denote different actions, and I think it's absolutely right that we're not looking at anything like as good an economic picture over the next year or two that we have in the last few years. And there are also question marks, what's going to happen to the job market and so forth. So we're all of us taking prudent actions, both individuals and banks alike. But I think there's another point in here, and it's called the Banking Code. And it's just been out for consultation, and all sorts of consumer groups and others have come back in and saying we want to see this, we want to see that in the code, and there's an independent review, and he's done his process. And coming out the bottom is some more changes to the responsible lending area. And that means that banks have got to do more checks and more detailed checks on individuals before they decide whether or not they're going to make a loan. And it also means that they gather more data on that individual from other institutions. So it may well be that before an individual would have been looked at bank in one way, but now they find out how that individual dealt with another bank or another institution, and they say, well, I'm afraid, your record isn't as good as we thought. Now, of course, you can see why we've been asked to do that. It can be a bit uncomfortable if you're on the receiving end, and it will change a few of the dynamics.
Sure.
But that is all about responsible lending. And on the other side is also a bit called responsible borrowing.
I suppose the question on a lot of people's lips is there going to be another Northern Rock? Will there be another run on the bank? And how safe is our money in British banks at the moment?
A, it's safe. B, this banking industry in the UK is not just well run, it's also well managed, well capitalised. And C, no, there won't be another problem.
Aside from the credit crunch, in the last year we've seen several controversies surrounding the banking sector. We've seen the bank charge test case, which is still rumbling on, payment protection insurance, which obviously banks are very much involved in, and just general accusations of aggressive selling techniques, all of which you could argue have taken their toll on consumer confidence. To what extent is this distrust of the banking sector justified in your view?
Yeah, it's an uncomfortable thing, isn't it? Can I come a bit backwards on that question, if I may? I mean, the first thing I'd say is, we're, I think, unique in the world to have this ombudsman, financial ombudsman, which surrounds the industry, which means if an individual isn't satisfied, they can go off to the ombudsman. And the ombudsman can make very broad-ranging decisions with individuals on personal circumstances. So we have something which allows people to complain, and often publicly, in a way that's second to none. So that's a good one. I mean, it can be quite uncomfortable, but it is a very good thing. And there was an independent consultant called Oxera who did an analysis recently on 10-15 major countries, and for the individual in just about every area, if you banked in the UK, it was going to cost you less than anywhere else. So we've got a lot of good things there. Where it comes to it being a bit controversial is that if an individual does go overdrawn without making arrangements first, and I emphasise that, without making arrangements first, there is a fee, and that fee results from a whole series of checking and things behind. But what 80% of people never get, that 80% of people actually don't pay anything for their normal banking. That the whole of the argument is all about, well, you shouldn't actually pay anything at all. And yet, going overdrawn without saying anything, it's sort of borrowing money you haven't got without telling anybody first. Well, do you know that's illegal in some countries? We've allowed it as a service here, but it's a service that's granted at a price under certain circumstances. And I think it would be a very great pity if the whole debate about whether or not you should pay that fee detracts from the fact that the overwhelming majority of people actually don't pay anything extra for their normal service. It's important, we think, to try and talk much more clearly about why you should pay for a particular part of your banking service, the unusual part, why it is important that we keep as much of those normal operations which you don't actually pay for in the UK. You've only got to travel to Europe to find out what happens when you go and use your card in somebody else's till, and all those sorts of things. And on things like PPI, the protection insurance, actually why it's important that people should have it. Getting that better relationship with a customer right at the start with new products, which is often about the right sort of explanations, the right sort of choices, is absolutely the way the banking industry is going.
Obviously, one of the issues is customer inertia and financial illiteracy among a lot of people in the UK. What are banks doing and the BBA doing to tackle the lack of financial education among consumers?
Well, we're trying to do our bit in a lot of areas. I mean, clearly it really starts in the schools, and so a lot of banks have got projects in the schools where they're doing a bit of financial education in a sort of fun way. What you don't want to do is have it sort of tacked on the end of a curricula. So there's projects there. Secondly, of course, the FSA, our Financial Services Authority, they've got a big role to play in trying to explain to consumers about the sorts of things that they should be asking. And a lot of that is funded by the banks. There's a personal financial education group, and we're in there. And then again, on their own behalf, either in the branches or again on individual banks' websites, there's quite a bit of financial information. And I think perhaps we've got a long way to go here in the UK, but the banks are paying for it both directly and indirectly to try and do their bit in assisting and just helping people to understand the sorts of questions they need to ask and the sorts of products that are the right ones for them.
Great. Well, thanks so much for your time, Andrew. It's lovely to meet you.
And you. Thanks very much. Come again, as I say, in a year's time. We'll see how you think the communication side particularly has gone.
Yes, I will.
Thanks.